Morning. Morning, everybody. Jim Johnny. Oh, audio on the YouTube. Morning, Ricardo. All right. Got long. First thing first. If anybody's playing along, I got long both Bitcoin and Nasdaq this morning on right around the open, right when I don't exactly know the time, but it was right after everything went goofy. They slammed it down. I was like, yoink. Picked it up and then took off, took my son to school. So uh, I was just kind of a too good of an opportunity. I'll touch on that one real quick, and we'll come back and talk to it a little bit about it a little bit later. But first, I got to do my daily morning practice of blasting through the market and taking stock of what's going on. So let's go. Do it live on YouTube, and then for a little bit, and then we'll start doing. We're back to doing the live just on just for the lab here in, I don't know, probably after Thanksgiving, I guess, maybe starting to start. The idea is to just like get back into the game and like, because I've been doing mostly swing trading for the last 9 months. Kind of stopped doing our day trading stuff and just been so focused on swing trading, especially with crypto, that I haven't been doing too much during the day. But the past month has been really last 2 or 3 months have been excellent trading environment. So I'm getting a little more active on the day trading, and why not? Okay, so I always like to start out where we are on our advancing declining issues. We are actually heading down towards it. This morning's little fiasco. Let me actually pull up. We'll go to the regular extended trading hours, just so we kind of have a little bit of context. That was, yeah, we went down from, let's see, about 6 a.m. We were at 2,600. We dropped down to 2,380. So like a 200, a little over 1% dip. And that got everything a little crazy. And you can see that the advancing declining issues average, based off of last week, of course, and this morning, really woke everything up on that oscillator. So we might actually get ourselves a move down into here, which would be weakness on the S&P. Maybe down into the maybe we get a move down into the 21 EMA on the weekly, which we will. I'm trading Curvy all the time, Ricardo. Curvy is great again. What are you talking about, brother? Um, it down into here is, if we do get a setup like that, I mean, you can see there's a lot of places that it never actually happened. But if we get a move down towards our level on SPX, it'll be an excellent buying opportunity for your long-term positions. So at the moment, we're just mildly off of all-time highs. So all-time highs above 6,000. We are currently at 58. So 100 points off of 6,000 SPX. That's kind of a chill place to be. Let's take a look at go across the markets here. We'll start with the dollar. because it is at an inflection point here, for the past year or so, I guess. And you know, when I say inflection point, to me that would suggest that we're going to probably move back down into the range or go somewhere else. And if we go somewhere else, then that's going to be like a big change in the market. And so, you know, actually, let's go to like 1 month, see what we can see here. Okay, it only goes back. Oh, yeah, we're actually kind of the dollar versus, the Dixie versus the Dixie itself was all we're looking at here. But, the last time we were really this high in October was back in 2000 to 2002. And the last time, yeah, still even with this range here. So it kind of looks like, the more likely path is to kind of head back into this area here. We know we like a weak dollar in the United States because it allows us to sell our goods to the world. And especially if you are doing something like sanctions, I would imagine, I don't know, this is me just, spitballing on this one. But if sanctions are going to be the thing, having a weak dollar, I would think would be a motivation. So, one of the theories is sanctions is going to cause a mass, the companies are just going to, or countries are just going to trade with each other, the BRIC sort of environment. It's true. But if we happen to have a weak dollar in the United States, the global reserve currency, and the most devastating military in the world, not that we're going to come in and win a war in your country. It's just we're going to come in and destroy your civilization for the next 20, 30, 40, 50 years. So that's more of the motivation to not deal with the United States, not piss the US dollar hegemony. I don't know what to not piss US dollar off. I don't know. I would just think that if you're going to do the sanctions, then you're going to want to have a fairly weak dollar to make that happen. When they did the sanctions so let's look, notice how the dollar did go down so strong. I might be just barking up the wrong tree or sniffing in the wrong bum. But that makes a lot of sense to me. Just sorry, we put sanctions on this, that, and the other. And oh, by the way, your currency is now stronger versus ours. So like the cost of a Ford Bronco or, a Taiwan semiconductor chip made in Phoenix, Arizona, is cheaper, I guess. I don't know. Generally the idea there. So I am keeping a big eye. I'm keeping an eye on the dollar as represented by the Dixie. Of course, if the dollar goes down, that means we're going to have yet another look. The dollar pumped, or Bitcoin pumped, while the dollar was rising. So imagine how strong a Bitcoin would be, or crypto would be, if the dollar becomes weaker. And so that's the next one I'm going to take a look at. And we won't spend too much time on crypto at the moment, but we will here in a little bit for those who are interested. But from that same period in October where the dollar kind of took off, you can see that Bitcoin itself rose by about 50%. So 60,000 to 92,000 at the moment. And what is that? That was the October timeframe that the dollar started to do that move. So, you're long Bitcoin, short the dollar by owning Bitcoin USD, right? So imagine if instead of the dollar going up, imagine if it goes down in value while, Bitcoin continues to accumulate in value. That's where it gets really exciting. Being, again, the 250, 300,000 price target at the moment seems pretty likely. And that would just be the 200, 300,000, 250, $300,000 price target versus the dollar on Bitcoin. To me, seems very likely, and actually kind of conservative, more of a normal move. That would be a normal move. Like that could happen with, like with all the supply shock that we've had, meaning the demand for spot Bitcoin from the ETFs, huge. Paul Tudor Jones, he has 10% of IBIT, I believe. That's a big chunk. Sailor, I might have been saying that wrong. It might have been just 10% of his holdings is IBIT. Sailor yesterday buying 4 billion in a single day. But almost a whole year of buying demand on Bitcoin since the ETF, and they're not making it any faster. In April, they made the reward was cut in half. So when you were making 6 a day, or maybe it was 12, I think it was 6 a day, maybe it was 12 a day before April. Then the halving happens, and boom, now you got three awarded per, not a day, but per block reward. So it's just cut in half again. But the thing that's interesting is that 6-month period post halving happened just like normal. It didn't, the supply or all this demand for it that we have with the ETFs and all these people buying it didn't change. That didn't change. The halving changed. And if that's such a demanding event, something must have been holding it down. I don't know what it was. And the strength in the dollar could have been it. Imagine a world. Now, this is just kind of like a Goldilocks scenario. So the average play out, the reason I say that, the way it plays out averagely takes it to 250, 300, just the standard analog. But what if, we do have a currency, a global reserve currency that decides to start going down? And if that happens, then we can see Bitcoin do something really, really wild possible. It is by far the strongest market to trade. Actually, let me just do this because I did this yesterday to see what the total return was for the year. So let's do. Where's the open? There's the open to high 112%. We'll call it 110% return on Bitcoin in 2024. So let's take a look at SPOOs in that same period. That would be 25% return. I believe that's more than NASDAQ, which is actually an odd thing. To see. Okay. 25%. So basically the same, actually. NASDAQ and SPOOs made about the same. Let's take a look at the SPOOs next. Well, we already did look at SPOOs. The strength in SPOOs is a lot higher than it has been in Qs. But we did eventually, because S&P has been in new highs since like September, I think. It started to get into new all-time highs. We just did it in NASDAQ, the first of the month of November. So, nice that it's happening. I think NASDAQ's going to, and we have NVIDIA tomorrow. So that might be one reason why. Gosh, let's go, NASDAQ. Let's go. Good day today. Good day today. Okay, bonds, kind of up on a tick. Twos, I think twos are the ones that everybody. So the other thing we would be looking at is if there is in fact this is just an inversion of the dollar, right? Because it's long euro, short dollar. So I'm thinking that we got a long coming up. We do have a curvy long right here. So if today closes as it is, then that would kick off the buy stop area over here. Let's see what we're running. We're not running anything. Okay. Um, so that would kick off a move above today's high to that low, and you know, you're up into the mid range to get to your 2R. But to get up to the top of the range, this is where it gets fun. If we decide to get up to the top range, euro could take, that could be like a really long-term move. Let's call it about 5.5R. Um, a lot of really good opportunity on that one, especially because it's just been, you know, sideways so much. So we'll be keeping an eye on that. Let's take a look at the yen. This is yen versus the dollar, not USD JPY, it's JPY USD. And you know what I'm seeing here is we are right back to where it is. Everybody's worried. So I think you know, with the dollar strength happening, I think that's going to start coming back. It might not happen until the inauguration of President Trump. It might not happen then. And, you know, just keep this in the back of your mind. There might be a reason that, so what happened today was I think this is the thing that caused like a big scare in the market this morning was Ukraine sent some rockets into Russia, these long range rockets that, you know, the US approved. You know, that is all we're, because it could be two things. It could be a couple of things, right? It could be the incumbent warmongers are saying, all right, well, you know, we thought we were going to have 4 more years to really, you know, I don't know if I want to say warmongers, the incumbents. And I'll just say this: when, you know, Dick Cheney endorses a certain candidate, you got to think, oh, that's a pro-war candidate, or regime or whatever, right? To me, as somebody who has spent so much of my life in that, you know, living that life, the wars, and, you know, not loving, it's not the best thing in the world. I mean, war was a really interesting part of my life for sure, but I don't want that. And so it could just be, let's just say the current regime was just like, let's, you know, let's make sure that we can get so much of what we, you know, the war economy. Let's pad our wallets, maybe. Let's like move that as far forward as we can in the next 2 months, to maybe it's non-recoverable, or I think that could be a very much a possibility. Just really turn it on, and then you know, the new president inherits that space. That's one thing. Or I also think that it could very well be an idea of you know, we know, professional broke memer, hi. You know, it could very well be you know, the president elect saying, hey, you know what, you feel free to do what you want to do, because it's just, you know, that's going to help me negotiate down the road, or something. You know, maybe he does have a really amicable relationship with President Biden right now. Who knows? You know, there's rumors that, you know, President Biden voted for Trump. They looked quite happy. I don't know. Maybe that's just a clip from something that I saw, and it kind of like, oh, maybe that's what it was. I don't actually know. I have no clue. And we've gotten to the very deep end of my political involvement. Like I'm looking for the more the play of, you know, what we're going to do in the markets, you know, how we're going to do all that. That's Schwab TV, TD Ameritrade TV over there. It's not Fox, it's not MSNBC, it's not CNN, it's not CNBC. And it's not Bloomberg. It's just the Schwab network. I used to be a hardcore Bloomberg watcher. Um, when I watched, I guess hardcore is not the right word. I used to watch the Bloomberg one, but now I like Schwab a lot more. They literally all they talk about is like stocks and kind of stock ideas. So I like that more. Okay, so we're in a great environment for let's just map this out. Dollar weak, sanctions or not, but dollar weakness here. So devaluing the currency, which is their game, they're great at it. This is not actually a true representation of it, because it doesn't show the inflation punishment that owning currencies. So what does that mean? That means that assets need to be bought in order to preserve your wealth. That's the move. And so if it's basically if you have $100,000 and you want to use that $100,000 to buy a $100,000 product 2 or 3 years from now, or have the opportunity to do it 2 or 3 years from now, you have to put it in something that's going to appreciate in value over about 12% annually, not 2 or 3%. Or I mean, the interest rate, we're at the 4.5 on Fed funds. Your bank is probably paying out 4.2 4%, 3.5, I don't know. So they're making money on that spread, but also it's still earning less than you would if you were in the S&P 500, which earns at about 12% per year. We're at 25% per year right so far this year. So it's we're outpacing inflation this year on S&P. Thank you, big tech, and NASDAQ. NASDAQ is closer to about 15-20% compounded annual growth. So that keeps you, in other words, you don't put your money in bonds because they're earning less than the 12%, or barely at the 4%, whatever it is. You definitely don't go out in duration by buying the 30s or the 10s or the 5s. You go to the 2 because the 2 is paying the best, closest risk without duration risk. So 2s are, if you have to be in long term, that's the one to do. Then you get your curve, and blah blah blah. Or, as always, Bitcoin, a 64% compounding. Yes, it has 60% drawdowns. But even if you bought the high of every single high, you're still way in the money. We're at 92. We're at 92. Nice. 92,000 right now. The high was, I think, was 69 last cycle. So you're still above that. The cycle prior to that was 20,000. Still above that. The cycle prior to that, I think it was like 1,100, 1,200. So every time, even if you buy the actual high, yeah, you have a period of 2 years of drawdown, but the next 2 years you have a couple 100% growth. And then you get into other crypto. So you start from the least risky, which we're talking bonds, we're talking rates, like 30 days T-bills. And you may have bought them at a time where they're going to, and rates are going to come down. You may have bought them at a time where you will have that difference, which is great for you. But it turns out that it still can't, even with that Fed funds difference, you're still not beating the inflation devaluation of the currency, which is closer to about 12% annually, compounded annually, and that's vicious. That's we have $30-something trillion in debt, and I think half of that happened in the last two or 3 years or something like that. So obviously that is something that you can't catch up. It took us 220 or 245 or 250 years to close to to build up a 30 trillion debt. And mostly that happened in, from 1945 to 2020 or so. And then in, let's say, 2 to 4 years, you've doubled it. And the whole world has to do what you do because you are the global reserve currency, us, and you will destroy an entire civilization if they, get out of line, too far out of line. And so there you go. It doesn't mean it never ends. It just means that it's very, it's a big risk to go against it. However, countries have like Ecuador or El Salvador. Some countries have started to put Bitcoin on their balance sheet for strategic reserves. That obviously is, and the U.S. is talking about doing it, or first of all, not selling any more of its Bitcoin first, and secondly, buying 1 million Bitcoin and bringing that into its strategic reserve. So, if the global reserve currency is suddenly backed by Bitcoin, at least at some level, some point of it, that's an interesting move, right? That's an interesting twist to all this. Another way to go, you don't have to go crypto. The other way to go, in my opinion, is to go big, profitable tech. And what I'm talking about is not losing your savings, not losing the buying power of your savings, because, if you devalue at 12% annually, it's something like 5 years that it's lost its entire value. Or better way to say it, if you can compound at 12%, you double the value. So if you have $100,000 earning 12%, I believe it's in 5 years, that's $200,000. I would pull up my calculator, but yeah. So if you have something that's more like a 20% thing, which is big tech, Amazon, Apple, Google, Microsoft, NVIDIA, Berkshire's in there now. I think the banks like JP Morgan, I believe is in there too. Costco, I think is in that sort of group where, maybe not Costco, but you're earning billions of dollars and a 20 to 30% profit margin on that money means that, you become, it's just, let's say you made $50 billion this year. What is that? 10 to $15 billion in profit. And you just keep buying back your stock with that. In addition to being profitable, you're buying back your own stock and it just has no, place to go. And because you're making you so big that you have to be the biggest component of the S&P 500. And by being the biggest component of, bigger, the larger, most large components of the S&P 500. Sorry, I was making sure my shirt was not inside out. Being one of the largest components of the S&P 500 means you have to be included in the S&P 500, which means every system that matches the S&P 500 has to own it. And it just becomes this loop, and then you can use your stock to go buy companies that you need or incentivize employees. And as an employee of a public company, let's say of like Apple, and you got $1 million in Apple stock, the move is to not sell your stock and go buy a house because, and I know everybody did that. I have a friend, a former Googler who did that. And now they're mostly just playing the real estate, kind of game. But had they just borrowed against their Google and used that for the down payment, they would still own the Google, which has compounded at like 20% annually, easily since she sold. So you have this environment where the corporates, if you're playing the big tech game, the moat is, you got there with your product and your people and your team and the markets, the demand for it. Great. you got ahead. Then, you have to continue to innovate, which means you got to hire the best people. Hire the best people means you're going to have to hire smart people. Smart people understand the tax treatment of, and if you are a somebody who wants to get into tech, you understand that one of the big reasons of working in tech is the compensation. Used to be Wall Street. Now everybody pretty much wants to work in tech, so that they can get fat salaries. First of all, yeah, 250 to 500 a year salary, and probably the same matching or doubling or quadrupling that in equity, of one of the one of the top investments in the world. Like anytime I look to take an equity investment, I have to say, okay, am I buying Nvidia, Apple, Amazon, Microsoft, Google, the top 5 to 10 tech names with the best profit margin in the biggest markets, Meta. If my investment can beat those, I take it. If it can't, I have to go there. I know that the crypto trade can beat it, so I'm absolutely there. I do own everything else is tech. If it's not a crypto name, it is Meta, it is Apple, it is Google, Nvidia, it's those, because there's no logical reason to own anything other than that, unless you're trying to be really cute. If you're trying to, or be patch a move at a time a move, I guess I should say, Tesla, time a move, that you're hoping could play out. Okay, and that's fine. I'm a trader, so duh, I get that. But the reality is, if it, I focus on the trading things, and the stuff that I don't do my trading in, I have in those names. Also MicroStrategy and Coinbase, and IBIT in that same portfolio, which is why it's freaking 136% this in 12 months. It's up 136% in 12 months. And it's been up all year, even with the MicroStrategy and Coinbase and IBIT volatility. It's been up all year. So it's okay. So we're done talking about that. Let's go on my current holdings. I'm still long Tesla, and I'm still long Apple. Yeah, let's see, Apple. Let's see, I got in over here. No. Yes, I got in there. Let me turn the swing B. This was actually a play into the end of the year trade. Not the, is it this one? Yes. So this is the crypto system actually used on Apple. So it got long earlier in the year. I went out to, I think on January calls on this, looking for a new all-time high. That's my angle. And then on Tesla, got long the day after the earnings, added again when it broke through the earnings high, and so been on that move pretty good. I've already talked about MicroStrategy and Coinbase. MicroStrategy is systematic trade, but in the big portfolio, that's my main one. Okay, let's talk about day trading now. So this is curvy, Ricardo. The way I'm trading curvy is I'm using the 4-hour chart on a 24-hour, 22-hour futures contract, the continuous contract of NASDAQ, and I'm letting it guide me on how to as you can see, if we're watching this yesterday, that would have been a curvy 4-hour long that would have got stopped out today on the rocket launches from. And I could be just talking out of my butt here. I assume that's what it was. I kind of heard tangentially that was the news, but I'm not really paying attention. I didn't look it up. Whatever. There was a spike down here that ran stops. I love, as you know, those of you who know the curvy system, the whole reason the curvy system was built was around catching the turns. And stops being ran during that period. So an artificial stop run that gets bought, or an artificial top stop run that gets sold. Those are what I love to see. You can see that we had these tops, and then you had that. So it's kind of, make sure I see it. So you have your top down, and then you have that like spike up here. And then instantly that just changed everything. That's what I'm generally looking for, is like a stop run that changes everything for a period. I'm also looking, and by the way, this period right here, it was kind of not tradable. But the period from September 19th until right around the election, the week, a couple days, it looked like the day before the election, it looks like, or right at the election, we traded curvy. I traded this range so freaking much. I would wake up, or I would, the market would close. If we were up near a top area, I would put my curvy short on, and then, kind of like manage it here. Let's go to regular trading hours. Manage it in this environment here. Here's your short, here's your long, and just manage it in the regular curvy setup as it kind of played out throughout that, that month and a 2-month period almost. And so I just used that bigger time frame to help guide me. Notice how we were in that time frame for 2 months, blast above it. Where did we stop? At the top of the range, right? We stopped at the top of the range, and now we're looking to move higher. What did we do? This gap up was a poor high. There was single prints in here. So what is this? This over here, this is just the volume profile. You can see that there was weak volume, very weak volume during the run up and the sell off. So we're going to target this area from this trade that I'm in right now. We may get, that's still 300 points above us. That's a bit of a jaunt. But most likely, if the way I see it is, we got NVIDIA tonight, right? No, tomorrow night. We have some sort of catalyst to get us up into this area here. If no catalyst, it could just drift up into there. Let's say we drift into the NVIDIA earnings, sells off, comes back into the range down in here, and then figures out what it wants to do. I don't know. Or it doesn't sell off. It cleans up this low volume node and then moves up into attempt to work this all-time high area. That's kind of my playbook right now, how I'm looking to play it. Come into, so was it yesterday? That looks weird. I could have swore I bought NASDAQ yesterday and got stopped out, and I don't know, man. I could have swore that happened. It might have been, oh, I see. Yeah, I must have bought it down in here, and then it dipped down into there. Yeah, I think that's what happened. I missed. Yesterday didn't do so well, and I was like, this is higher time frame kicking my butt over here. Somebody is doing something with NASDAQ that I cannot figure out, and I wasn't positioned to, like, that's not curvy trading, right? That's as at best that could have been one, but it didn't work out. That could have been one, but it didn't. It took some work to work out, it looks like. Yesterday could have been like a 2R curvy short and like a 0.5 or a 0.25 winner on the upside. So yeah, yesterday was good. I got taken out yesterday. like at two stops, trying to get in here, I think somewhere. Today, however, this was a big, this is rare. Today, days like today are not common for me, where a curvy lines up and it is higher time frame traders in charge of the day. When that happens, you ride it. You don't take your 2R profit, you ride it until, it's done. I'm waiting right now. That could have been it, but I got a big signal saying, okay, buyers came in. Big money buyers bought that dip. So this is just, think about, put the context of this in there. Bad news hits the market. Instant sell orders come in. Stops got ran right there, right? Stops. Where are you going to put your stop if you're long from here? You're going to put it right below there. Or if if you got long down in here and it came all the way back, it held, you're like, okay, I'm not going to feel any more pain. There's a lot of places where you're going to put your stop, and a lot of them are right there. So big stops get ran this morning on this big news. Whatever it was, my alarms went off, and I looked at a chart and I was like, whoa, and it just melted down. And then I waited for a little bit and I saw it just turned right around. And I said, okay, that's it. And it was somewhere in here that I got long on it. Might have been the 5-minute. This is a 10-minute. Must have been like right here, 8 a.m. See what time I posted it. 7:41. So must have been like right in here. Actually, this was a little bit discretionary, I think. But what happened is we were down at the range, that got stopped out, and then it was like I just saw the buying come in. I think I hit it. And then yeah, it just sent. So what's that? 25.32.55. Wow. Yeah. Right here was my entry. And so yeah, that just took off about 200 points, give or take, 130 or so, 140 points. And then it just sent. So it's the context. This is like the discretionary side. The curvy trade, on the other hand, would still have taken the trade right here. You just wouldn't have had all this whipsaw. Like, you would have had very little pain. You'd have got your 2R right here, or if you're, your 2.5R. Let's see where I am on the little more discretionary side of this, 6R. So understand that this is 25 years of experience. I'm not saying that you should change your rules when you're trading curvy, but this is 25 years of experience. That doesn't work out every day. Yesterday, by the way, the 25 years of experience didn't help me. So, but I guess 25 years of experience, recognize that, hey, something is not working very well. So stop being an idiot. I was like, oh yeah, I could do that. I should definitely do that. And so yeah, it was even if I didn't recognize it there, I was watching it as I was I had a chart up while I was driving, not looking at charts, but just like passively seeing it. And all these tails down in this area where it was, the support, there was big support on the 4-hour. And so I just kept seeing even if I didn't take the trade when I did, I would have taken the trade at the regular curvy because of those tails and where we were on the higher time frame. So it's a minor adjustment to trading curvy. This is why, I'm doing live streams more. I'm going to start doing these, every day, so that, those of us in the lab who are trading curvy can get, access to this. We can like think together. Okay. Bitcoin, I still think that if there is weakness, how to identify a market regime shift before the SQN color flips into a different regime on the daily? Price action, but I don't. Price action will tell me, but I don't. I don't try to anticipate market regime shifts. I'm late to a market regime shift by design. I don't want to. I don't want to be early. I want to be late. So by being early, for example, how many times have you sold a high thinking that the top was in and it was done, only to watch it take off? Like how many people sold Bitcoin at like 1,000 or 2 or 3,000 back years ago when it hit 20,000? How many people sold, let's say, Nvidia? Great one. Oh, that's an algo. Where are we at? Okay, let's do Nvidia. Like how many people sold Nvidia at the equivalent of 200, right? The split 4-for-1. So it was trading at 200 here at the end of 2023. Like non-split adjusted, this was $200. You can see that when it hit $200, what did it do? It stopped. It just stopped everything, right? It was done. And then it 2x'd. I'm sorry. 1x, 1x. It tripled in value. Yeah, it tripled in value in the next year. And I don't know. Let's see what the regime would have said to answer this question. Oh, it already had it. Okay. Off. You go off. So your regime said, okay, we're in bull volatile. This is a top. We just hit 200. Everything's great. Lovely. And then we go back to bull quiet. You're thinking to yourself, okay, great. Okay, great. Okay, great. Then it goes into bull volatile right above 50. So now you're thinking to yourself, oh, I can't get in now. Bull volatile means it's probably a top here. Right. And so you sat back and maybe you were smart enough to get it back into this area here. But the point is I, especially when we're talking about day trading, because I can see within a day trade, I can see the daily price action and understand where we are most likely on the market regime. So let's take a look. My guess on NQ, I haven't looked at NQ for the market regime for it, but I bet we are pretty low, probably middle of the bull quiet. And I believe we probably were in neutral in the last, we got down to neutral in the last month or two, since September sometime. That's my guess based on price action for the last couple of months. Bam, nailed it. After we peaked and had our August 5th meltdown, this thing, NASDAQ, traded back into neutral. And I know that because the price action that happened from our, that range that I talked about here, where I was saying all we were doing was, come on, stop freezing, computer. Part of my strategy here is to live stream and then have my computer freeze. And then one of you is going to buy me a new computer. That's my strategy. Let's go. Let's go. Unfreeze, unfreeze, unfreeze. Are you guys hearing me? Okay, you're hearing me. Okay, good. It's just the video's frozen, huh? Boy, it's laggy. All right, there we are. Okay. Um, so uh so that so this was the August 5th low, right? It says 6 because it's the 24-hour contract. But this was the I'm gonna hide your video, iPhone. That way we're not. You might want people to see it. I don't know. I just hit your video for it because it popped up on my screen. Okay. And I'm gonna mute you. Okay. So knowing that this whole thing happened since September, this was the low. I did know that we had the sell off from mid July. Remember, we were 100% long our equity portfolio, and we moved down into like 10% long here. So that opens up a crash. Also, we did have our trusty bull volatile indicator happen at the same time. So that's like very indicative of a major market top or a sell-off inbound. So, okay. But then guessing where we were on the market regime, Ricardo, was based off of price action. Like I said, knowing that from September 19th until today, we basically have been in this big range outside of that little spike, the post-election spike and dip, which has low volume and it's a poor a single print area. So this is going to have to get worked out. I love it. I'm excited about that. I think, we could probably continue to keep getting this good curvy environment that has just been epic for the last 2 or 3 months now. I think that could take place. The dollar being weak could change that, and we could get back into bull quiet and maybe head into a bull volatile move whenever that happens. We'll keep an eye on that. But that's how I would answer that, Ricardo. All right. Bitcoin, we are so close to putting in new all-time highs. This is the combined Bitcoin of Coinbase, Binance, Bybit, and CME. If that goes, again, we're watching. I'm watching Dixie here. I want to see what happens with the dollar or the euro maybe. I want to see how they trade, but I the strength in the euro, weakness in the dollar should be an even bigger influence on Bitcoin. Interesting. This is since the election here. Total 3. This is the market cap of all of crypto. So we've got Bitcoin and total, which is everything in crypto, including Bitcoin. This is Bitcoin itself, the blue line. And then total 3 is Bitcoin and Ethereum removed, and US dollar tether, USD circle, the stable coins, because they're such big participants of that market. That's them removed. And we have, and I wrote about this last night in the email, in the newsletter, saying this is the sign that it's alt season. And it's not happening in Ethereum and Bitcoin, even though those are crushing right now. There's a stealth alt season happening. It is happening. It is over in other spots. And I think AI heading into NVIDIA's earnings probably going to catch it. It looks like gaming is starting to catch a bid. So a lot of DeFi would then do it. Of course, memes have been the thing. They are still looking, somewhat strong today. Stronger, actually, one of the strongest today. We've got real world assets continue to be the strongest, with AI kind of close behind. This is so let's go back to the election and see. It's kind of surprising that it's so many weeks past. I'm so surprised. There it is. Okay. The best performing asset overall since the election is Bonk, then Pepe, then Doge, then Brett, then AIOZ. So finally an AI one. Sui. It's all meme coins. So you can get tricky and try to get on Solana and Skills and Track and Near and AIOZ. So those are all AI coins. They're doing okay, but they're not doing as good as the memes. And if that doesn't tell you how to trade crypto, you know that you have the hardest core of the hardest core. Sorry, I have a message and I'm not sure if I need to address it. Okay, I don't. The hardest core are in Bitcoin. There's nothing else to them than Bitcoin. And then of course you have all of the traditional finance folks are going to be in Bitcoin if they're going to come into crypto, right? And because it's crushed, Bitcoin is crushed. 120% plus on the year, 120, 130% up on the year. And the year started when the ETF happened. So it's not like you needed a bit of a discount. But then all the way on the other end is the memes, the meme coins, right? It's not everything in the middle. Everything in the middle is where money rotates, and that's fine. We will rotate with it. But the easiest thing in the world to do is to just go own the memes. And there's two categories of memes. The first is the stuff that you can buy on exchanges, which is what we trade. And again, 180 Bonk is up 187% since the election. Pepe, Doge, 130%. You could get in 2 weeks, you made as much as Bitcoin made in an entire year. And the reason that the meme coins, so you just stop thinking about what they do what they're supposed to do, which is let people trade. It doesn't freaking matter what lie they're trying to tell you about what they're going to solve in the world, like so many other crypto projects. It's just that they are there. And the other thing about crypto is it's always onboarding people who are looking to make life-changing money, because it is possible and has been proven possible every 4 years. And every 4 years, people join and say, okay, I'm in on Bitcoin. This is amazing. I love it. And then they suddenly realize there's no way I'm going to make $1 million this year trading Bitcoin. I'm going to go put $500 on Bonk and turn it into, $1,500 in 2 weeks. And then actually what they really, really do, that cohort, they go out and they go on Dex Scanner and they start playing the meme coin game. And so you've got the exchange memes, you've got these decentralized exchange memes, which, these are the memes that are doing the 1,000%, 10,000% moves. And, it only takes one to really change everything. So a lot of that, and it's a crazy world to be in. It's a tough world to trade and be in, but it is where everybody is, not everybody, it is where a lot of the money is. So if you are not trading the crypto momentum system with us, there you go. Bitcoin and memes. That would be a great opportunity for you to, like, feel free to mute your mic here, Keith. And your camera. If you, Keith, if you want to say something, ask me a question, something like that, feel free to type it in the chat. Okay. I don't have my audio on. I just noticed that your camera and your microphone were not, or were on, and basically what we try to do is just, I'm happy to turn the audio on to listen and have a conversation with you for sure, but just to keep things organized, to start a conversation on that, you use the chat. And if you were unaware that you were unmuted, you're welcome. We've had some funny hot mics in this place before, and so it's always the we've had some embarrassing hot mics, I guess I should say, over the years. There's been some fun ones, so I'm trying to be gentlemanly and make sure people don't hot mic on accident. So going back to the sectors, crypto sectors, we are, same thing, meme categories, stable coins. I'm sorry, not stable coins, alts, and then the different sectors, and Ethereum being the lowest performing, as always, of them all. All right. I think I'm going to wrap it up here. It's been about an hour. Does anybody have any questions they want me to cover that I did not cover? Anything you want me to go over? All right, I got folks over on YouTube. Just double check and see if there's somebody says over 200. Yeah, probably. I don't see any questions. It looks like we're getting kind of close. Loe, buddy, good to see you again, sir. We are going to start doing these daily again, assuming that they are worthwhile. I'll continue to do these for about an hour a day, just to have our full overview of what's going on. Johnny, you bet, brother. I think we're about to see something special on Bitcoin, aren't we? That buy this morning? Yeah, Keith, it will be on YouTube later. Yep. I'll post it in the Slack. That Bitcoin buy earlier, man, that was a crusher. I love it. I got get in 92 126 is when I got in on the Bitcoin one. So let's look at here. See, it was the futures. So so yeah, same thing when same Bitcoin move. When the Bitcoin move happened, or the NASDAQ move happened, I took the Bitcoin trade at the same time. And yeah, it does look like we are about to get something really special happening in Bitcoin, which I'm always a fan of. When Bitcoin moves, boy, we move. Ricardo. PSPS? I don't know. I don't remember that one. Yeah, man, memes. If you're a meme trader, go for it. Right now I'm looking for this is my setup right now. Where are we at? Do I have my I don't have where is my portfolio at? Oh, here we are. I'm in Doge, AIOZ, Solana, Sui, Origin, and Bonk. So Okay, everybody. Have a wonderful day. I love you all. And I'm out skis.